Hi and Assalamualaikum. Today our group will present financial position and financial performance analysis for three companies which are TO, Unisem and Frontken Corporation. Before we are going to present, let me introduce our group members. My name is Mohamad Ameer Syafiq bin Mohamad Nizam. Our second presenter is Atira Binti Tajul Urus, and our third presenter is Aisyah Binti Mustafa. Without waste any time, we move to the introduction. Business analysis is used to discover, express and assess the need for change in how business operates. As business analysis, we recognize and categorize the solution that will maximize the value offered to stakeholder by a firm. So this assignment include 4 chapters, which first contain the profile of the company analysis. The second is the vertical for financial position. The third is a horizontal analysis of economic performance. Lastly is recommendation to improve the weakness of each company. So we move to the first chapter, which the background of the company. DNO, which Green Technology Berhad, along with its subsidiaries, is involved in manufacturing and merchandising of semiconductor component. It is also involved in the development of semiconductor application technology, installation, electronic component, electrical equipment for lighting, electronic display screen and lighting fitting. The business operates in one segment, which semiconductor industry. Geographically, the company export its product to Asia, Europe and US. So second company is Unisem. Unisem Berhad provides semiconductor assembly and test service in Malaysia. Its packaging and testing facilities are located in Ipoh, Perak, Malaysia, Chengdu, China and Batam, Indonesia. Their products are wafer bumping facilities in Ipoh, Perak, Malaysia and Chengdu, China. Unisem assembly and test service including wafer bumping, wafer probing, wafer grinding, a range of lead frame, substrate, integrated circuits, packaging and other materials and services tests. Its turnkey service include design, assembly, test failure analysis, electrical and thermal characterization, warehouse and dropship services. The company has its business present in Asia, Europe and America. Third company is Frontken. Frontken Corporation Berhad Malaysia is Malaysia-based investment holding firm. The company with its subsidiaries are engaged in provide surface and mechanical engineering solution service including heavy industry such as oil and gas, power generation, semiconductor and marine industry. It also provides various specialized engineering services such as thermal spray coating, cold break-up coating, plating and conversion coating. In addition, the company provides surface treatment and precision cleaning for the thin film transistor, liquid crystal display and semiconductor industry. Most of its revenue comes from the market from Singapore, while it also present in Malaysia, Taiwan and other countries. So we move to the second chapter, which vertical analysis. For first analysis is DNO. Long-term borrowing for the company increased to 0.46% from 2019 to 2020 and decreased to 1.61% from 2020 to 2021. The company taking on debt to obtain immediate capital causes an increase in long-term debt, which even though it took a year to rise between 2019 to 2020, DO managed to decrease its long-term debt, which is a strength in terms of the fundamental or core of the company. The current asset, property, plant and equipment decreased by 1.82% from 2019 to 2020 and keep decreased 4.87% from 2020 to 2021. Cash and bank balance for the company increased 1.22% from 2019 to 2020 and decreased to 4.03% between 2020 to 2021. Next is equity share capital, which decreased from 27.02% in 2019 to 24.88% in 2021, dropping 2.14% and increasing to 35.96% in 2021, growth of 11%. Off record, the last balance sheet of 2021 shows that the DO balance sheet appears to be relatively stable, with its total liability almost equaling its liquid asset. But even it's hard to conceive that the 6.80 billion ringgit firm is having financial difficulty, we still believe it's essential to keep an eye on its balance sheet. In a nutshell, DO has net cash, but it is reasonable to assume that it does not have a significant debt. Next, we move to the Unisem. The non-current liability, which borrowing, decreased from 6.81% in 2019 to 4.78% in 2020, shrink 2.03% in 2019. It decreased to 2.02%, shrink to 2.74% from 2020 to 2021. Deferred income growth is 0.06% from 2019 to 2020 and 0.36% between 2020 to 2021. Deferred tax liabilities increased 0.29% from 2019 to 2020 and grew to 0.39% in 2021. Moreover, the current property, plant and equipment asset decreased to 8.57% between 2019 to 2020 and increased to 5.35% between 2020 and 2021. Next is cash and cash equivalent, which grew 9.9% from the prior year between 2019 and 2020 and shrunk by 5.67% between 2020 and 2021. In 3 years, equity for share capital increased from 33.59% in 2019 to 38.57% in 2020, growth of 4.98%. In 2021, share capital decreased to 1.32% in 2020 between 2020 to 2021. Malaysia's technology industry has followed Nasdaq's success ever since the rally inception in 2020, when the US technology exchange mood shifted negatively at the beginning of this year, causing a sell-off. It was the same, which this could lead to a decrease in the share of capital. Even still, the price of local IT stocks are now trading below their 5-year average values. So that's all from me. We move to the next presenter, Atira.
My name is Atira and I will continue to present the financial position for Unisem. Okay, in terms of the company cash in 2019, it was the lowest amount compared to the other 2 years, which is 2020 and 2021. Due mainly to the repayment of terms loan, the group's bank borrowing reduced from 207.4 million to in 2020 to 174.9 million in 2021. It leads to a decrease in cash and cash equivalents to lower the payment of sum due to banks, the government or company suppliers for previous transactions or occurrences, and for the company fixed asset, the result shows that it was good because of the increases among fixed asset for every year. So overall, the company's long-term debt dropped significantly, demonstrating its success in restructuring the loan to lower interest payment, making it affordable. A large number of standard size in share capital means that Unisem has a large shareholder number. And lastly, for return earning, there are some increases every year, which is good for Unisem to expand their business. So next, the lead's financial position in terms of company cash, it was as same as Unisem, which is an increases of company cash during 2019 to 2020 and start to decrease during 2021. It was not good for the company. Their fixed asset at first dropped from 2019 to 2020 and began to increase by 7.84% during 2021. So, Frontken reported decreasing 0.85% in terms of long-term debt. For the company's share capitals, there are no changes between the amount in 2019 and 2020. But unfortunately, in 2021, the amount has dropped by 0.41%, which is not suitable for the company. And lastly, for return earning, there are some increases every year, which is good for the company to expand their business. So, we'll continue to overall comparative analysis. So, comparative analysis to three of the three companies. We know that in 2020, it is challenge for the company to sustain due to the movement control order worldwide. For the long-term debt, for the three company analysis, Frontken is the lowest in size of the liabilities between Unisem and DNO. Between 2019 to 2020, Frontken reported decreasing 0.85% in terms of long-term debts. In terms of the equities of the company, we could figure out that Unisem is put much proportion size of share capital, which is in 2019, their standard size is increases to 4.98% and 37.25% during 2021. It start to decrease to 1.32%. A large number of standard size in share capital means that Unisem has a large shareholder number. So, in the conclusion, based on the analysis, we could find that the NO performance best among Unisem and Frontken. So, the NO had growth in current asset better compared to the others. However, in terms of non-current asset, it looks to drop its non-current liabilities, which signifies that the company managed their long-term debt well. The company equities also grew from 56% to 58.5% to 63.1% in 2019, 2020 and 2021, indicating that the company has the potential for dramatic changes. So, I will continue to do a horizontal analysis for the NO Green Technology Berhad. The first one is revenue. It shows that the percentage increases yearly, which is suitable for the company. The same goes for the cost of goods sold. The company performance was in good condition as the amount increases every year. For their expenses, even though the amount is increasing every year, it is suitable for the company as it was not exceeding the revenue. They also shows the increases in earning before interest and tax and profit after tax every year. This indicated that the company has had an excellent financial performance so far. So that's all from me. I will pass it to the next presenter.
My name is Binti Mustafa and I will continue to present the rest of the presentation. Moving on to the Unisem. So revenue for Unisem declined from 2018 to 2019 with the 2017 as a base year because the US-China trade and tariff war and other protectionist policy reduced consumption and global commerce. However, in 2020 and 2021, we will see the increases as the COVID-19 outbreak has modified consumer requirement and behavior, making a semiconductor more popular. So next, moving on to the cost of goods sold, show decreases in 2018 to 2019 due to the underinvestment in capacity when the pandemic broken out in early 2020. It have a increases of the electronic and semiconductor supply chain were unprepared for 2021 chip demand. So next, total expenses has decreased for 2 years from 2018 to 2019. So notable change dropped 74.65%. So after counting for the net one-time expenditure on severance benefit and impairment charges related to the termination of operation in PT Unisem in Batam, Indonesia, while in 2020 to 2021 are expected to see the growth as the automotive industrial recovery caused a chip shortage. So moving on to the next company is Frontken. So the graph above show index number trend from 2017 to 2021. So this index include revenue, cost of goods sold, expenses and earning after tax. So in 2018 it reached 110.33%, while in 2019 the revenue grew due to the strong demand from global customer in the semiconductor and of course oil and gas industry, and led the revenue increase massively in 2020 to 2021. So next, cost of goods sold. The data fluctuates between 2017 to 2021. So in 2018 it shows an increased trend and decline to 2019, but we see the increases on 2020 to 2021 in the revenue. So it shows that the company business activities have fluctuated as a COVID-19 spread. Frontken Corporation helps fight COVID-19. Uncertainty in the company activities makes spending unpredictable. So from 2017 to 2019, the expenses fell, In 2020 to 2021, it has a moderate increases on expenses. So finally, Frontken earning after tax for 5 years of data show a rise, and in 2021 it jumped 313.73% as oil and gas customer increase capital spending due to the high barren crude oil price. So the rise of earning after tax is a good sign for a company which could maintain or strengthen a framework to develop and increase the profits. Overall comparative. Moving on to the overall comparative. So D&O Green Technology has the most significant revenue of the three companies due to the vast customer base. It was unaffected by the pandemic that still occurred in Malaysia. So it is followed by Unisem and Frontken. So after a true evaluation, we determined that D&O Green Technology had the best cost of goods sold. So according to the report, the percentage of D&O in charge of cost of goods sold increased from yearly from year to year. So the company has more revenue generating activities than others. So this company is the best option for a investor because it can earn the most in cost of goods sold compared to its two rivals. So D&O has the most earning after tax of three companies. While Frontken Corporation Berhad manage cost better than D&O. So and Unisem, a more significant percentage of profit before interest and tax than other companies, show lower debt and more cash on hand, which help investors invest in Frontken. So the business benefit from the rising percentage. So what I can conclude is that D&O financial performance has been consistent despite the COVID-19 pandemic, which began in end of 2019 and continue until today. So this corporation can handle its capacity properly, allowing its subsidiaries to have enough money, while Unisem will terminate operation in Batam, Indonesia. So due to continuing losses since 2011, the company closed. So even though the market is good, investors shouldn't invest in this company. I think that's all from us. Thank you.